All right, we're at all-time highs for the market. So let's get Ajay Srivastava, the CEO of Dimensions Corp, with us. Ajay, it's been a terrific ride for this market. Every wall of worry has been climbed with ease, right? Whether it's a war, whether it's higher interest rates, whether it's volatile crude prices, the market has just moved on. But at this price, at this point, at record highs, how are you feeling?
I think feeling very good. You told me you've gone for a break, and I was wondering you'll come back after maybe about 2-3 hours, given that you must be celebrating the high, and everybody should be celebrating, because you're right, great wall of worry. What a difference 30-day makes. 6% knock up in 30 days, return of the nifty. And I think it's a great thing because it's backed up by something which is interesting about the fundamentals. If it had come out of vacuum, I would have been the circumspect, but coming at a 7.6% GDP growth rate, I think we are on the right track at this point of time. And therefore, that takes away the little bit of concern you have in valuation that if we can go at 7.6% GDP, I think we should be doing fine.
Ajay, good afternoon. Thank you so much for joining in. You've been advocating PSUs for a very long time now because of the dividend yields that they offer. But now, with the stocks having gone up 200%, 100% in a year, along with the dividend yield, would you still have the heart to go and tell an investor, yes, this is the place to be in?
Heart and the wallet. I promise you, heart and the wallet. It is still the cheapest segment of the market. And I think that's the greatest part of the thing. And number two is, most of them have been leveraged to a large extent. And that's apart from the company like PFC, which job is to lend money. So they've done a good job with it. And the beauty of this is that these. So I would still say relative valuation, monopoly. In fact, we have an election next year tells us one thing. Doesn't matter which government comes. I think you'll have a good run with PSU this point of time. You've seen what happened to defense stocks, monopolies again. So, so PSU, yes, were initially dividend plays. They've done very well for us. And the capital play has become just incredible, absolutely. And I don't remind people like PFCs, they were at 100 rupees a share, not maybe in this year itself, perhaps. But I would still say maybe not the financial companies, but the industrial companies, the commodity companies, defense companies, I think they've still got miles to go. They've got legs on it at this point of time. And as government keeps selling their equity over time, it's fine to be there and rather than just the heart.
All right, that's on PSUs. But one very interesting observation, right, Ajay, is that despite the market being at new highs, so many of these bluest of blue chips have just not participated this year. I mean, Reliance, for example, is down 6% this year. Kotak is down 4%. HDFC Bank is down 4%. You think the time for these heavyweights to participate is now?
Very difficult. Okay, let me put it this way. There are so many more exciting opportunities coming up in the economy. There's so many IPOs, so many new ideas that you really don't want to go back to the old fogies for 3 reasons. One, they have destroyed value for the investor in the last 1 year decision making. So you pick up HDFC Bank. The merger was a disaster and continues to destroy value. Look at Reliance. Sub 10% EBITDA in a country where interest rates are 9.5%, 10% is just not a good business proposition. So it's not just about these companies not performing or adding value. The business model does not tell us that they will give great value to us. On the contrary, so many new stories have come up, which is such an exciting platform, good traction of profitabilities, fantastic growth opportunities. Just compare, for instance, the TVS Motor versus a Reliance. Both are in retail at the end of the day. One is selling just one item. Look at what Reliance does. And you see the difference in performance at the end of the day. The guys are brilliant, making margins of 15 and 18%. Reliance makes a margin of 8% on retail. That's not the way you want to be. So answer is no, category. They may look cheap, but well, as we fundamentally say, cheap things look very cheap also. So don't worry about it. Forget about them. So many news stories, Sonia. You need to focus on tomorrow, not the yesterdays.
All right, Ajay, we leave it at that. Thank you so much for joining in. PSUs, the flavor of the year. And as Ajay says, they still have more legs to go. Time for a short break here on Halftime Report. On the other side, Manisha Gupta joins in with Kunal Shah of Nirmal Bang Commodities. Stay tuned. We'll be right back.